these journalists, these legacy journalists, that get paid a lot of money, mostly to just invert reality and mislead the public, like routinely. It's well known at this point, if you want to succeed in life, you should probably just do the precise opposite of whatever legacy media is telling you to do. They're like the devil on your shoulder trying to ruin your life. Like whether it's what to do with your money, what to do with your health, or what to put in your body, they always invert reality almost every single time.
All right, welcome to another episode of Token Narratives. I'm Graham Stone. Thank you. Joined by Alex Richardson. How you doing, sir?
Excellent, sir.
All right. We're going to talk about Bitcoin today. As usual, Bitcoin continues its long and painful march downwards. After the 10% down candle last week, where we touched around 60K. We did see a strong bounce right back to that 70K or just above area. However, since then, Bitcoin has been continuing to bleed out. And at the time of recording, it looks like we're sitting around $67,000. So today we are trying to answer the question, has Bitcoin bottomed? And to that end, we're going to go through what we see as a bunch of indicators that Bitcoin has bottomed or is, 90% of the way there, or is in the 7th, 8th inning. Choose your metaphor. And we're also going to go into reasons that Bitcoin might not be dead forever. So not just that we've hit the bottom, but that we are actually going to bounce and some new narrative is going to catch it. And to that end, we're going to be discussing, some of the reasons people sold and whether those reasons make sense and will continue to make sense in the future. So let's get into it. Starting off with something called RSI. So RSI, Relative Strength Index. Am I right, Alex?
That's correct.
So the relative strength index, I'm not much of a chart bro, okay, but relative strength index, this is a key one, right? It measures the magnitude of recent price changes. So we are at record territory, I think, for the relative strength index. I've got this chart here. It's there's a lot of waves and patterns on here, but if you look very closely, the most recent print right here on the very far right of the chart is an RSI of 16. So the last time we have seen that number was 2020, which was right after March 2020, right after the basically the COVID dump. And then we saw an epic rally of
It's like a 20x almost.
Yeah, it was like an epic run up to $69,000, right? From $3,000 to $69,000. That was the last time we were in RSI, Relative Strength Index territory of that we are now. And the time before that was November 2018. Which was basically the bottom after the 2017 bull run. So I guess okay, it's an indicator, all right, but it gets a bit more complicated. The professional traders tend to look for after, like, when RSI hits this like a record low number or a rare low like this. What tends to happen is they look for something called a bullish divergence. So basically, after you hit this number, you look for a higher low. So we dropped to around 60K, and the traders will look for a higher low. I don't know, something above 60,000. And if that happens and the relative strength index stays a little bit higher, like say 25 or 30, that will be seen as a bullish divergence, which is like a confirmation signal that a reversal is coming. So I don't know if you have any extra thoughts on that, Alex, of whether I explained that correctly.
Yeah, basically you want to see price continue to go down while the RSI gives you hints that it's about to come up. So if price keeps going down, but the RSI is making a higher low rather than a lower low, then it's a hint that the relative strength and therefore the price is recovering and about to rebound.
Okay. So the RSI is one major indicator that points to us like being close to a bottom or potentially having bottom. Another one is the MACD, the moving average convergence divergence. Now this also hit a new all-time low. So this is an indicator where the RSI is an indicator that tracks the magnitude of a dump. The MACD measures more of the velocity or the speed of that drop. So when the MACD is extremely low, and let me just bring up this chart here. It's in record low territory right now. You can see in this chart. So when it's very low, when it's deeply negative like this, it means the short-term average price is significantly lower than the long-term average price. So essentially, Bitcoin has never lost value this fast relative to its historical averages. So potentially this signals that like the selling momentum is it is the strongest selling momentum we have seen perhaps in the history of Bitcoin. Now I think someone noted that only 4% of all days in Bitcoin's history have actually been further below the 200-day moving average than we are right now. Now, you could look at this in two ways, I guess. One way to look at it is the bearish view that, okay, momentum is accelerating downwards. So this isn't just a dip, it's a structural breakdown. The floor is actually lower than anyone expected, and we're just going to keep going down. Now, we're going to go into reasons why, at least I think, that's not the case. But the other view, the contrarian view, like the bullish view, is that when the MACD gets to this historically low level, it does indicate a bottom basically a bottom for Bitcoin. So, all right, how am I doing here, Alex? This is making sense?
Yeah. And just beyond the indicators, just measuring the vibes, honestly, the pain is getting quite palpable, isn't it? Like the sentiment is probably worse than I remember in recent memory. And just the Bitcoin grave dancers are out. The legacy media is shitting on Bitcoin as usual. And it looks like it's going to get a bit worse, but maybe not that much worse. Like it looks like most of this is behind us. Personally, I'd be looking at let's say 48,000 area as sort of a floor price. And if I may indulge in some male astrology here, 48K acted as a resistance during the 2021 bull market, resistance for that dead cat bounce during the 2022 bear market, and support during the 2024 bull market. So a lot of confluence there. It's also sufficiently below the 200-week moving average, which is usually an appealing place for long-term buys. And it would also be below the average realized price, which is currently at 55K. And we do go below the realized price in bear markets. We went below it in 2022, 2018, and 2015, and also 2012, but maybe 2012 isn't relevant.
What is the average realized price?
It is the average price that each coin last moved at. So it basically gives you an idea of how many people are in profit or loss. So it's like a pain gauge. And
you're saying that it's currently at 50?
55. 55 according to and this is just the average. Like you can look at the realized price for certain cohorts, long-term holders, short-term holders. I'm looking at the average
Overall.
and that is usually lower. And it's usually lower. Like that actually is not the best pain gauge because most people didn't buy in 2012. So the average is skewed by the OGs who have a much lower cost basis. I think if you look at long-term holders or short-term holders, there's a lot of top buyers who are in pain, like people that bought in the summer or September, October. If you look at those cohorts, then they're in a lot more pain.
Okay, so the chart I've got here is looking at the everyone included, and it's still the current price is still above the average realized price there, like the global average realized price, right?
Yeah,
but
so it suggests we could go a bit lower.
Yeah, although as you mentioned, right, there's different cohorts to talk about. So one is the ETF cohort. Now it seems that their average cost basis is $82,500 for the US ETFs. So the average ETF buyer is now underwater.
Yeah.
Now, you could argue that is another signal that we may have, or I mean, okay, how do we know when we've bought it? We've got all these indicators, okay, but it's really at the end of the day, it's when sellers are exhausted, right? That when there are less sellers than buyers, right? That's when you've bought them. Now, if everyone is already, if like, yeah, the marginal market participants, ETF participants, if they're already underwater, are those people looking to sell at a loss here, right? Perhaps, most of the volume, the sell volume there has already occurred. You could look at it the other way though, right? Like, okay, finally there's just going to be a wave of capitulation on the ETF sellers.
Yeah, it's hard to say because this cycle we have totally new types of market participants. Maybe in 2018, you could say that once we're below cost basis and people are underwater, then the average retail trader is going to panic sell because they hate being underwater. But now that the market is dominated by the institutions and these ETFs, I think these people are more conservative. They're okay with being underwater for a bit. They signed up for this volatility. And so I wouldn't really expect them to just start panic selling as soon as they're underwater.
Yeah, you could imagine like a lot of people who got into the ETFs, it was on the advice of their, registered accountant or whatever it is, registered investment advisor. And the guy would part of the pitch would have been like, look, Bitcoin's extremely volatile. If you're going to purchase this, you have to commit to holding it for at least 4 years, or
exactly.
Like some sage advice like that. So, and it's only a small portion of their portfolio for a lot of the people. So they're just like, okay, whatever, that it is what it is. I'm diamond handsing this for at least one cycle.
Yeah. And the other indicator, the other cohort that is usually interesting to look at as far as who's underwater are the miners. I don't know if you have that production cost chart, but it's pretty interesting.
Yeah, I do. Let me bring that up.
So Bitcoin has found support at the estimated cost of coin production many times. And there's some important caveats to that metric. First of all, it's impossible to get a 100% accurate number on the average cost of production because it's going to be different depending on geography, electricity prices, like the size of the mining companies. Everyone's got different costs. And so depending on where you look at it, it's going to be a bit different. Yeah, so the chart that you're sharing shows that Bitcoin basically never goes below that line. But there's also like a free indicator on TradingView called mining costs, and it shows that it goes a little bit below. So it's going to be different depending on where you look. But the point is that when price gets to that line, and sometimes you got to draw lines on the chart and just hope for the best. And it has acted as a good bottom signal. And just to clarify, like what actually is production costs and why it matters, mining companies have to sell BTC in order to cover their operating expenses. And that creates sell pressure near the cost. So miners are paying whatever they're paying, electricity, hosting, payroll, debt, servicing, rent, and they have to pay that in dollars. So if BTC falls below that all-in cost to produce a coin, then many miners must either A, sell their BTC and their BTC treasuries, which would be a capitulation or sell pressure, or they shut it down. And shutting it down would be buy pressure, because once the weak miners shut off, now there's less new supply hitting the market, which eases sell pressure and helps price stabilize. It's honestly like, it's kind of spooky how it all runs like clockwork. So, and it might not always be a bottom indicator. And as it stands now, we're just above that cost of production. In the 2022 bear market, we went below that by about 15%, I think. And translated to, and we stayed below that for about a month. So if you translate that to today's prices, that would mean we hang out around the 53,000 level for about a month. But I think it actually could be worse, because this time the hash power is more dominated by the bigger companies that can now probably afford to stay below cost basis for a little bit longer because they've got big treasuries. Like I saw Eric Trump on X. He has this big mining facility, and he's probably losing a shit ton of money on it, like all the time. But if he has money, then he can continue to mine at a loss. So, anyways, it's a interesting indicator to watch.
It is interesting, although to be honest, I don't really get the logic of it, because I understand why a commodity rarely trades below its cost of production. And, that's just like basic supply and demand, I guess, right? Like if it costs $100 to mine $100, what is it? It costs $100 to mine to produce a kilogram of coffee. All right. Let's say it costs $100 to produce a kilogram of coffee. Once coffee costs less than $100, people are going to stop making it. If the market price for coffee is less than $100, people will stop making it, and then therefore, like, the price comes back up to whatever the cost is. Okay, but Bitcoin doesn't exactly work like that, because there's just always the same amount of Bitcoin being produced, isn't there? So I don't really understand the logic of that, but maybe I'm missing something.
I'm not going to pretend I fully understand it either. It's illogical, but the chart doesn't lie. Like when price gets below there, I think it makes sense that the smaller miners are going to go bankrupt. And this has happened. The hash power has been consolidating for a long time, even since 2022. You've seen it consolidate within the big players, and these big players have a lot of money and big treasuries, so they can afford to operate at a loss. I guess it depends on how much they believe in Bitcoin long term.
Yeah. All right. So we've gone through some of the pure technical analysis indicators, RSI, MACD. We've looked at this cost of production thing. We've gone through some of the cost basis indicators. So yeah, ETF holders, mostly underwater. The average cost basis still not quite there yet. Maybe another indicator to discuss is the long-term holder supply. So there's a Bitcoin analyst that goes by the name of James Check. He's an on-chain data analyst, and he's been doing the podcast rounds of late and it's talking about some interesting data. So one point that he brought up is that the current long-term holder supply is very high. So at around 14 million or 17% of the total supply. And that is close to 2020 levels before the bull market of 2020 that started then. So this is another indicator that could perhaps point to the fact that, there's just currently a large supply of coins that are static and potentially, are held by people with high conviction. So long-term holder supply trending upwards.
Yeah, that is the main use case of Bitcoin so far is hodling, and it helps its buy pressure for sure.
Yeah. All right. Some other indicators that we may have bottomed. Obviously, the capitulation event of last week, where Bitcoin dropped like 10% in a very short amount of time. That's classic capitulation. Every bottom in a cyclical market they usually end with some kind of capitulation like that. It's a major event. So we did get that. That's another potential signal that we have bottomed.
Yeah, it happened really quickly. Like maybe I'm coping, but the speed of this correction, it almost suggests that first of all, most of the pain is behind us, and also it almost looks like a liquidation event, like something to flush out the leverage and create like a scam wick, like a March 2020 scenario, rather than a grinding bear market that lasts years and years. Like it could be, if you think the 4-year cycle is dead, it could be just like a liquidation event in the middle of an uptrend. Don't want to cope, don't want to make a prediction on that, but just the speed of it is, I think it suggests something like that. Now that we've tapped, what is the 200-week moving average? I don't know. It does. Yeah. It does kind of look like it could be a mid bull cycle correction rather than the beginning of a depression.
All right, let's move on to another one, which is the Bitcoin is dead. The Bitcoin grave dancing folks have come out. So we have a few to cover here. What do we got? There's the Financial Times. A lot of people talking about this one. Bitcoin is still about $70,000 too high. Is the headline. And this author just rehashes some of the most commonly cited reasons for Bitcoin being dead, or Bitcoin being just useless. It's a failed Ponzi scheme. I don't know. Is there much more to what this author was saying? I did read it, but it has a few convincing points. Like the author's saying, well, look, we Bitcoin crypto got everything it wanted for. It wanted, right? The most bullish president you could imagine. All the like regulation, institutional flows, BlackRock buying, JP Morgan endorsing it, all the stuff, right? Sovereigns, like even like El Salvador embracing Bitcoin. And yet here we are. It seems to have run out of buyers and belief and is collapsing, right? That's sort of the thesis of this piece, I guess.
It's the same arguments we've been hearing since Bitcoin was $100. Like I wouldn't really. This is a contraindicator, in my opinion. Like these journalists, these legacy journalists, they get paid a lot of money, mostly to just invert reality and mislead the public, like routinely. Like it's well known. It's well known at this point. If you want to succeed in life, you should probably just do the precise opposite of whatever legacy media is telling you to do. They're like they're like the devil on your shoulder trying to ruin your life. Like whether it's what to do with your money, what to do with your health, or what to put in your body, they always invert reality almost every single time. Like inverse Kramer is a well documented phenomenon, and yet Jim Cramer still gets paid $5 million a year to go on TV and make you lose money. Like why would they do that? It looks like they just hate you and they want you poor. Like that's the only explanation. And I'm not accusing this author, what's her name, Jemima Kelly of Financial Times, of being a devil. Like she actually seems like quite a nice lady. I watched an interview of her. I don't think people should be being mean to her, but I don't think she realizes that a lot of the arguments in this article are, like I said, the same things people were saying when Bitcoin was at $100. Like they're saying, oh, what is it? What even is it? What value does it have? Some people are losing lots of money on it. It's the greater fool theory. What's it backed by? The narrative keeps changing. It's not being used as a means of payment. And it's like, the implication is that markets have to be 100% rational and logical in order to be legitimate. Otherwise, they're a scam that needs to go to zero. She brings up an argument that I've seen a lot, which is that like how can Bitcoin be scarce when there's a million other cryptocurrencies that do more than what Bitcoin does? But like I could say the same thing about handbags. Like Chanel and Hermes Birkin bags have been outperforming the S&P 500 for decades. Like it's a well-known thing. And these bags, they serve no purpose other than just letting women status signal to other women. Like I think it's stupid, but I'm not going to get mad at handbag owners for outperforming and telling them they're all idiots. Or I could say, how are Chanel handbags scarce when there's thousands of other handbags that are more functional than them? Like I could use a plastic bag to carry my stuff in.
Yeah, those bags are worthless. I could just create my own luxury brand. Therefore, Chanel has no value. It's the same argument, right?
Yeah, or like Patek Philippe
Chanel
watches. Like
these luxury brands have a network effect similar to Bitcoin, right? Like people agree that they are valuable assets.
Yeah, it's the greater fool theory, but clearly the greater fool theory is legitimate and works in every single market. So why are you arguing with it? Like I don't know why these people argue with price charts. Like, do you want to make money or do you want to not? Like it's so easy to be bullish and positive on something when it's gone up a lot, and it's really easy to be bearish and negative on something when it's gone down a lot. But that is literally the exact opposite way you make money. But these Bitcoin grave dancers just forget that because most of them are already getting paid a lot to do nothing. So they're not even really thinking about investing in new innovative technologies. So I don't know. Like,
yeah.
The point is
I mean,
the Bitcoin obituaries are usually bottom signals, and the mainstream media is usually just pure cancer.
Yeah. And just to I like that. Just to add to that, this being a potential bottom signal, right? Like on the Financial Times website, the readers of the Financial Times, right? They've got the comments section. And I spent 10 minutes reading through this, 5-10 minutes reading through this. The vast majority of them are supportive of the author's statements, right? They agree. So that to me is also an indication that it's a bottom signal to me, right? If the people in the comments were saying, "Nah, you're wrong," there'd still be that belief, right? So, but they're all agreeing. Therefore, it means like everyone thinks it's dead, and only when everyone thinks it's dead can it rise from the ashes.
Yeah, the whole comment section is wrecked too. So their sentiment is down as well. I bet if Bitcoin was at 150 and she wrote a positive article, then the comment section would be agreeing with her because people just love selling the bottom and buying the top for some reason.
Yeah. So there was another one, Paul Krugman, the Nobel laureate Paul Krugman, basically saying, rehashing similar arguments, I believe. So just another example.
Yeah. I think he brought up that it's not being used as a means of payment, like as if anyone really cares about that. Like it's been established that it's not being used as a payment since forever, like 2013. So he's a little bit late on that.
Yeah. It is an interesting question, the payment thing, but maybe that's not how people view Bitcoin. Most people view it as an investment, like a long term, something you hold, not something you use.
Yeah.
All right, so we've got a bunch of grave dancing. We got what else? Basically, I think we've gone through all the reasons. Now, yeah, anything else, Alex?
No, go ahead.
Yeah, so maybe moving on then. Let's try to go through why people sold, the reasons people have been giving for having sold, and let's maybe try to respond to those, because I think in that process we may be able to eke out whether not just Bitcoin, not just whether Bitcoin has bottomed, not just like technically, or whether it can actually bounce back, like whether it can catch a narrative, like if what the fundamentals are still in place, if any, for Bitcoin after this. So let's go through some of those reasons. Let's see. Okay, quantum's a big one that people have been talking about. So of course, people have been saying that Bitcoin isn't quantum ready. Bitcoin can be attacked by a quantum computer can break Bitcoin's encryption, and this has actually been cited by at least one influential Wall Street manager as for why he has removed Bitcoin from his model portfolio. And a model portfolio is right. People like follow these as okay. This is how I'm gonna like allocate my portfolio based on this model. He removed Bitcoin and cited the quantum risk. Okay, so that has been put forward as one of the reasons Bitcoin has sold off. But is it a valid reason? I don't know how deeply you've gone into this one, Alex. I've been going kind of deep down the rabbit hole with this one, listening to a lot of extended podcasts on it. And I don't know. I'm increasingly coming to the conclusion that it is it's FUD. It's an the fear of the quantum threat is overstated, and it's just Bitcoin can adapt to the to like if quantum computing does advance, and it's very unclear whether that will actually happen to the point where it can break Bitcoin's cryptography. Even if that does happen, in the unlikely event that does happen, Bitcoin can still there's an easy path to upgrading it. Yes, there like coordination will be an issue, but anyway. Okay, quantum, one of the reasons people sold.
And I don't think it's FUD, to be fair. Like it is a very real risk. The risk being that eventually quantum figures out a way to run Shor's algorithm to break Bitcoin's elliptic curve technology. Like I think that's pretty reasonable expectation. The problem is that it's just very undefined. Like we have no timeline, and I guess there is a chance that it never runs Shor's algorithm. But if you're managing billions of dollars, then I think it's reasonable for some of these guys to just assume the worst for now and lessen their allocation of Bitcoin. Like if there is a bear case for Bitcoin, I think that is a reasonable narrative rather than just what you see from Financial Times.
Okay. Yeah, good point. What else we got? Reasons people sold.
Maybe the October 10th flash crash. I think that was pretty demoralizing for a lot of crypto natives. So I can see a lot of retail just wanting to get out of crypto completely because they feel betrayed and don't want to keep crying in the casino.
Okay. To me, that one, it's like, why did people sell? Because the price went down.
Yeah.
I don't know. It seems kind of reflexive. But another big narrative is maybe the biggest one is that Bitcoin hasn't been keeping up with equities and gold. And therefore the hope, right, that like that it would has sort of dissipated, and people are like, oh, wait a minute, maybe Bitcoin is broken forever. It didn't live up to its promise as digital gold. It's supposed to outperform equities to the upside. What's going on here? It's not happening, so it's broken forever. I feel like that's perhaps the biggest fear that people have right now.
Yeah. Well, I think an underrated fact is that the correlation between Bitcoin and gold is almost zero. Like they're almost like counter correlated. So people shouldn't be shocked when they're doing different things. Bitcoin's real correlation is with the software industry. I think it's the iShares software ETF. I think it's iShares. I could be wrong, but it's like one of the big software ETFs. If you overlay that with Bitcoin, that is the only thing that has a very exact correlation with Bitcoin for the past 3-4 years. And software is being murdered right now, probably because of AI. And so that might be that maybe that's a reason people sold is they're viewing Bitcoin as a piece of new software because that's the only thing that makes sense right now to view it as, because you can't, none of the other narratives are making sense. So maybe that would be a good bottom signal is when Bitcoin starts to decorrelate with software.
Interesting. I mean, historically, I feel like Bitcoin has sort of sniffed out weakness in the market and reacted first, like in the COVID dump, for example. Bitcoin dropped before equities even, and like this, I don't know about you. I feel like the stock market, U.S. equities, it looks like they're. I got the feeling it's rolling over, and that maybe Bitcoin has sort of sniffed that out and has reacted first.
Yeah, I think that's totally possible as well.
And therefore, and then on the other side, it also tends to like be the first to react like in the new regime.
Yeah. And I also think that there could be a very simple left curve reason for the selling, which was that price was actually just pretty high. Like 126,000 is not a bad bull market price target. It doesn't sound that good now, but if you put yourself back in 2022, like the idea of hitting 126K, that's pretty good. Like that's 700% from the bottom ish. And I can imagine whales looking at the chart and saying, you know what, it's Q4 of the post-halving year. We're well over the big psychological level of 100K. I'm up like 50x. Like, do I really want to ride this out for an extra 20, 30% when we could go into a bear market any day? Like that's basically what Jordy Visser's concept of the IPO moment is, right? Like that moment where early adopters had to take profits off the table because they're just up way too much. It doesn't make sense to hold billions of dollars of Bitcoin from a personal portfolio standpoint. So honestly, I think that's like the driving force behind the October top. Just like big entities needed to de-risk after making one of the best early investments of all time.
Yeah, so that would indicate that it's just a natural selling, and there's nothing broken about Bitcoin, right? It's just like there had to be this turnover between people who've been holding for a decade or even longer in some cases, and new entrants, and that zone around 100K was just like the natural place for that to happen, and it just led to a cascade of selling. And we may have now like reached some sort of equilibrium. If you look at, again, all the technical indicators, things are lining up. We're probably near the bottom, and we're going to see like this turnover, and a new cycle will begin.
Yeah, price goes down and then the narratives appear. Like not very many people were talking about quantum and paper Bitcoin ruining the scarcity narrative, or all these other narratives. They weren't very popular when Bitcoin was at 126. But now that we've gone down, now the narratives come. We have to figure out a reason why it went down.
Yeah.
Other than just accepting people sold.
All right. So I think, okay. So this is looking. I feel like we're making progress here. We've gone through all the reasons that we think it's probably bottomed. Gone through a bunch of reasons that like just cyclically why people would have sold. So let's just speculate here for the last few minutes of the podcast. Like what could, it's kind of just fun. Like what could be the narratives that that people latch onto here when we start going the other direction?
Personally, I think the AI narrative is the most important one right now. And I might look like an idiot in a few years because this sounds so fantastical to imagine this scenario. But I'll give you two main reasons why I think AI is important for Bitcoin. So first, we've been asking ourselves for years on how to onboard the next billion users, or how we can make it so that anybody and their mom can use a wallet. But given that the user experience of DeFi and using crypto wallets is terrible and not really something that I can see very many people are ever going to figure out, the answer to that question of how to onboard the next billion is probably AI agents. Really speculative, but AI agents don't care about the bad UX. They don't accidentally send coins to the wrong chain. They don't forget seed phrases. And there's an infinite number of them. Like they could be the next trillion users. And like Jordy Visser talks about autonomous commerce, billions of agents all working with each other. And they're going to need to do things like rebalance portfolios, whatever they do, pay contractors, run customer support, maybe run supply chains. They're going to buy and sell stuff. And in order to do all that, they're going to need wallets, and they're going to need to make millions of transactions per day or minute. And I think the reality is that right now, most people don't really need crypto, but AI agents will need it. And crypto's built perfectly for them. So
I buy this argument, but it doesn't seem like Bitcoin is the benefactor of this. It feels like it's going to be, I don't know, a faster blockchain.
Yeah, I think it will probably be predominantly on other L1s, but theoretically, and this is hopium and speculation, but maybe they could use Bitcoin to borrow stable coins against, or maybe use it as some kind of hard asset to anchor themselves around. Like there's so many ways that this could go about, but I don't think it's unreasonable to assume that they might use Bitcoin as like a reserve asset or as some sort of like treasury asset. Even if they're on Ethereum, maybe they have to use wrapped Bitcoin. But
Yeah.
if
I don't know.
AI reaches
Yeah, go ahead.
if AI reaches super intelligence, then they might be intelligent enough to figure out that Bitcoin is a good reserve asset.
Okay, that's interesting. Yeah, like to me, if you're an economic actor out there looking to transact in the world, just like get things done, Bitcoin does not work for that. You would use I don't know, like USDT on Solana or something, right? Um, but
Yeah.
yeah, if they like become conscious and want to speculate, like on like whatever savings they have, then yeah, maybe those economic actors, just like all the other economic actors in the world, will they'll just be like a new set of buyers for Bitcoin. That's interesting. I mean, this would mean that these agents would have to become wealthy though for them to have meaningful savings to pump into like an asset. So that's I don't know. It gets very sci-fi to me. Like, why would the agent be wealthy and not the person behind it? I don't know. I don't get it.
Or it's just the person running the bot, and they've instructed the bots to do that. If humans still maintain some control over the agents, like there's so many ways that this could play out. It's yeah, very very sci-fi, but I think
Yeah.
reality is becoming sci-fi.
Yeah.
Okay. Oh, sorry. And the second reason why AI is important is it's crushing. AI is creating an abundance of oversupply of labor and technology and productivity. So, like, if you're an asset allocator, do you really want to be investing in a SaaS company right now when some kid in Bangladesh can reverse engineer the entire thing for free at home? Like, or do you really want to be buying software when my mom could just build the whole thing herself using Claude? Do you want to be trying to like pick tech stocks in that environment? Do you want to be investing in real estate when everyone's about to lose their jobs, or robots are going to build houses for like 10% the original cost sometime in the next decade? I think Bitcoin is like one of the few assets right now that AI can't destroy. It's got quite a nice moat, so I think it makes sense that asset managers might look to park more money in BTC as like a AI hedge. And also,
Okay.
last thing, AI is already an important trend, and I think it's more realistic that Bitcoin and crypto can piggyback off of that rather than expect crypto natives to create their own narrative.
Okay. Yeah, that's interesting. Um, I mean, okay, let's potential narratives that Bitcoin could catch again, right? You talked about the AI, especially the second part that made sense to me. But the digital gold narrative, all right, like um, that Bitcoin, when there's geopolitical uncertainty, it's going to react in this as this like alternative asset, right? And we sort of got that moment here in the last few months, last year or so, and gold did it, right? Gold seemed to like catch that bid rather than Bitcoin. Um, but it does seem to me that like that narrative could easily just come back. Like, uh, all it takes is for so if we're like back up above $100,000 a Bitcoin, suddenly people are just like, oh yeah, well it's reacting like this because global uncertainty, and gold has already like reached its peak, and it's like I don't know. It just seems like that narrative could easily just come back.
Yeah, and I think things are only going to get more geopolitically uncertain uh, for the next few years. So that's going to play that's going to support Bitcoin. I don't know if you saw Balaji's
Yeah,
Balaji Srinivasan's tweet, and
yeah,
I think for the next few years, Balaji will continue to look maybe sensationalist and dramatic, but over the long term, I think he's going to end up being right. I'll quote his tweet here. He said, and he's saying this as everything is melting down, big liquidations. What was that? The fifth, and he said, "I have never been more bullish on crypto because the rules-based order is collapsing and the code-based order is rising. So the short-term price doesn't matter. As international law breaks down, we will need not just on-chain currencies, but on-chain companies." And he goes into like internet capitalism, internet democracy, and how we need crypto as the international rule of law breaks down. And again, I think maybe right now that seems a little sensationalist, but it does kind of seem like it's trending in that direction. Western governments are spending more than they make, and they're becoming increasingly aggressive in how they generate revenue. And so in the past, when people tried to escape with gold, maybe it'll be easier to escape with Bitcoin. So I could see, like, as far as another narrative, I think the unconfiscatable narrative could pop up. Not that. Yeah. I think it's dishonest to say that Bitcoin is unconfiscatable. Like, tell that to Ross Ulbricht. And whenever you bring it up, people say, "Oh, it's just like seed phrase management." But it's not unconfiscatable, but it is more unconfiscatable than, let's say, the cash in your bank or the stocks in your Fidelity accounts or your house. So I think that's
as long as you self-custody it, of course, right? The Bitcoin that is like the thousands of Bitcoin that are sitting in the BlackRock's IBIT ETF, those are very easily confiscatable, just as easy as like the gold certificates or whatever, right? So it's only the self-custodied Bitcoin that are harder to confiscate than probably even gold itself. And Balaji's tweets or from February 5th, he mentions this exactly, specifically, right? Like, he's saying, once as governments, especially he points to Western governments, like, get into the sovereign debt crisis, they're going to lash out and try to, like, paper over the cracks by seizing people's assets. And he points to gold as the asset, of course, that was once seized, right? Like in 1931, I think. And he's just saying that, like, Bitcoin, digital assets in general, but Bitcoin specifically, much harder to seize, and therefore, like, that's a powerful use case for it.
Yeah, and I think that's for me, that's the most powerful narrative going forward. AI and then the unconfiscatable trade.
All right. I think, Alex, that's a good place to wrap it up. Really enjoyed this discussion with you. Thanks for your insights. Thanks for having me weekend, sir. Thanks for everyone for listening. And see you next time.
See you later.